Hi, and welcome to the Stock Scores Market Minutes for January 22nd, 2018. This week I'm going to talk about Don't Chase the Wave, my regular weekly market analysis, and then the trade of the week, a day trade on Nike. So don't chase the wave. What do I mean by that? Well, trends tend to move in waves. You have an up wave and then a down wave. An upward trend has generally longer upward moves followed by shorter term pullbacks, which are the down wave. Many traders tend to react by buying after a number of up days. It feels better to buy when the market is strong. What happens though is that they end up buying at the top of the up wave just before the inevitable pullback wave that takes stocks lower. And so it's better to work against your normal human intuition and actually buy after a few weekdays looking for the next upward wave. So if you have an upward trend, wait for the pullbacks that come back to the trend line, and that is the opportunity to get aggressive. Ultimately, we want to trade on what is coming, not on what has passed. All right, let's get into this week's market analysis, and starting off as we always do with the S&P chart, and we've got a nice upward trend line there. We had some weakness last week, which I was a little nervous about, taking prices back to the trend line. And it looked like maybe there was some selling pressure coming in. What happened though is that upward trend line held, and really this was just a case of run away from the trend line, pull back to the trend line, and now that we're back to it, it looks like we're going to continue higher. We broke out through that short-term resistance zone to new highs after spending a few days underneath it, and again it looks short-term like the market wants to continue higher. What's somewhat frightening, however, is the nature of the trend, because we have a parabolic upward trend line. I can draw a series of steeper and steeper trend lines showing how investors are getting somewhat irrational. They're chasing stocks higher. There's this fear of missing out. Having said that, I have seen markets get parabolic for a very long time before the bubble bursts. And so although I think it's important to be cautious and certainly dance close to the exit door, there's no reason to jump ship just yet because the market looks like it wants to continue higher. Now, where I think some of the best opportunities lie is in the small caps, because they haven't kept up with the large cap sectors. This is the weekly chart of the Russell 2000, symbol IWM, and it is basically a representation of small cap, the smallest 2,000 companies, but still not that small. And they are starting to play catch up with the S&P 500, and we're seeing it move to new highs in the last couple of weeks. And so perhaps that is where some of the opportunity lies, because these stocks haven't participated in that big long-term rally. Moving along to the Canadian market, which has also really lagged the S&P 500. It is in an upward trend in the short term, but it is in this little bit of a pennant pattern there. What we need to see is a breakout through resistance at the top of that pennant pattern. Until it happens, I wouldn't get too excited, but the general trend short term is up. It's just more of a slow and steady rather than exciting market. And you see it when you look at the longer term weekly chart. We're in this very narrow range that slowly grinds higher. It's not really exciting, but it's not one that hurts individual stocks. If you have an individual stock that has something going on, it can do well. Problem is, when you do your market scans on a daily basis on the Canadian market, you just don't see a lot of good opportunities in the larger cap area. There's been some excitement, of course, in the cannabis stocks, in some of the mining names, and that's on the shorter term side, which we really get represented by the TSX Venture Index, which you see here. And there you can see the real excitement that has driven those stocks higher. Now, we had a big run from 800 to 930. Typically, we see a 50% retracement. That would take us back to about where we are. The question now is, do we break down and see further weakness, or do we bounce off of that Fibonacci retracement level and continue higher yet again? Something to watch for this coming week. Onto the Treasury bond market, which is an important chart because this has been locked in a trading range for some time, but in the last couple of weeks we've seen some weakness, and this week we actually had a close below that support zone, which tells me that bond prices are headed down from here, not considerably down, but down to that support zone. That means interest rates going up on the US side, which really affects global markets. US dollar is at support. It really broke through support during the week this week, but it managed to claw its way back. And you can see it's just kind of right at support. I wouldn't say it's a screaming, show of support at that level, but it's trying, and it is quite oversold. Why do we say that? Because if I draw a trend line like that, we are quite far below the trend line, which means it's due for a bounce back. Until it breaks this downward trend line, I wouldn't get too optimistic, but it is at a point where it should bounce. Let's see this week if it does bounce. And the gold chart heavily affected by that US dollar chart, because of course gold is priced in US dollars, and so it needs to hold that trend line right about in there, which it's right at now. If it can break through the trend line, maybe it continues higher. I think a lot of that is going to depend upon whether the US dollar can hold support or not. If the US dollar falls lower, I think gold can move higher. But for now, my expectation is you see gold pull back in short term, maybe only a week or two. We'll see how that pans out. And the oil chart, I've drawn here this week the daily version, because the weekly version doesn't look as exciting as the daily. The daily version's getting steeper and steeper on the upward trend. A few days of pullback, given the runs, maybe we're going to pull back even more, take us back to that linear upward trend line. But the trend is up. It's positive. It's broken through some longer term resistance on the weekly, and so I think oil can move higher, although I wouldn't be surprised to see a little bit of a pause in the near term. And as always, we like to look at the fear chart. And of course, fear has been on the decline for a long time, but what I find interesting is that while the S&P 500 is moving to new highs, which would mean I would expect this one to be moving to new lows, it's not. It's actually building some rising bottoms, and that shows that there is still some nervousness in the market, and that nervousness could lead to a further pullback. So we want to keep an eye on this. If we get a pullback in prices, the VIX is a place to play, because you'll see this break out of that pennant pattern and head higher. I would not buy it in anticipation of such a move. I would wait for the break to come, because if you have bought the VIX any time in the last number of years, it has been punishing for you. It is a great thing to trade when the market is correcting, but until we get a correction, don't get too aggressive with it. So US stocks came back from last week's blip lower, and they closed this week at new highs, overcoming the negative breakdown. It really wasn't last week. It was the first day after the holiday. They remain risky, but with that strong upward momentum, it's still the place to play. You can't argue with the trend. Canadian stocks are slow and steadily higher. Not exciting, but certainly not hurting individual names that want to try to do something on their own story. Gold stuck at resistance short term, but if the US dollar continues to weaken, I think that can break out. Oil may see some profit taking soon, but right now it's still in that nice upward trend. A slight increase in fear, which means we should be watchful and see how things work out. All right, here is a chart of Nike, which I traded on Friday as a day trade. The little pink dot that you see right there is my action candle indicator. It's the reason I bought it, and I bought it more or less right there. I don't remember the exact price, but it would have been within a few pennies of that price. And then I just held it all day, sold it at the end of the day using this worm strategy. Ended up getting 7-to-1, a little better than 7-to-1 reward for risk out of it, simply following that action candle, which looks for this big abnormal spike in volume and some abnormal price action, coupled with a couple of other techniques, really drives into that day trade strategy called the worm, where you enter them very quickly in the morning and then tend to hold them all day unless they get stopped out. All right, well, that has been this week's market analysis, and I hope that you've enjoyed it. Please subscribe to the channel, like the video if you enjoyed it, and leave a comment if you have any questions. Have a great week in the market, and trade well.